What's up, traders? Chosen Trades here, back with another video for you guys. In this video, I'll be going over a trade that I took for a buy during ICT's New York kill zone. I'll be covering bias, entry, what made me take the trade, trade management, and any reflections after seeing the trade play out. Let's get into it. Alright, with bias, in terms of narrative on the charts, I was bullish for the day and even bullish on higher time frame. So let's start with the weekly time frame. Alright, so as we can see here, what is the question I always ask myself is, what is the market doing? The market is currently up, so we can see even just what price has recently been printing on the charts. We're currently in an uptrend. And another question I would ask myself is, where is price likely to tap into or draw to? So price, my target was here, so it was most likely to tap into the 1.06, what is it? Yeah, 1.0057 level. So it did that indeed. And then going into next week, I'm anticipating price to tap into the 1.10657 level. Let's drop down to the daily time frame. So yeah, we can see price is currently up. It's been up since, honestly, October 30th. And obviously we had this nice volume candle, strong volume candle on November 3rd. Glow retracement exploded even more November 14th. Then it's just been making its way up. So yeah, this is my next level of liquidity that I anticipate price to tap into. Yeah, so as we can see, prices, market structure of price on the daily and weekly time frame are up. This lets me know that price is likely to draw to buy side liquidity, as I mentioned. And let's look at the dollar index, the DXY. So as we can see here, price is bearish, extremely bearish. It tapped into this draw liquidity this week at the 1.102.946 level, and I'm anticipating next week price to tap into here. We may not get that tap, that purge of liquidity next week, but at some point along the road, I definitely want to see price tap into here and then ultimately into here, going to the daily time frame. So yeah, price is currently bearish. You can just see lots of lower lows and lower highs being created. You can see price created this market structure shift earlier in the month. Got that market structure. Price tapped into this fair value gap, rejected and reacted well. The nice downside delivery. Price did some inducement, taking out retail buyers and then dropping down a little more. Went back into another, even marking up for you guys, another fair value gap right here. Yeah, another fair value gap. Tapped, rejected nicely, created a new lower low. Price then traded back, taking out retail buyers, trying to grab some liquidity, take out those equal highs, creating more orders to bring them for the algorithm to engineer price to take it lower. So it's doing that. With that, we can see there's already a rejection to the downside, and I'm anticipating price to even tap into this lower draw of liquidity of sell side. And then eventually I do want to see this. But yeah, let's get back into EU, talk about the trade that I took during the New York session. All right. So let's start with the entry and what made me take this trade. So my entry was taken off the 15-minute time frame. I entered off the bullish 15-minute order block. So I marked it up right here. This is the order block. And an order block is simply a change in the state of delivery. So we can see this be a valid order block due to price tapping and taking out, retail sellers, or not retail sellers, taking out. We can see that price traded into a fair value gap right here. So it traded back into this fair value gap, balancing price. So now price is balanced, so it's an equal price range. And then with the change of state delivery, in order to create the momentum with the market structure, price does the change in state of delivery. So now this is a bullish movement upwards, while also creating a market structure shift right here, and then price tap into this order block. And if we go up to the 1 hour time frame, we can see this is a valid 15-minute order block because, as I mentioned, change of state of delivery. So price is moving up, taps right back into here, this order block, then boom, price explodes all the way up. So this lets me know that I'm on the right side of the market, where price is moving where it needs to go, drawing to the next level of liquidity. And just to keep in mind, the order block was formed pre-New York during the London session. So this was definitely a beautiful setup. This is a beautiful setup that was going to be taken the New York session. So I saw the rejection, and I didn't really see a fair value gap because I'm big on using the fair value gap to get into a trade, but I didn't really see it even when I dropped down to the 5-minute blitz, and then we'll drop into like the 3 or 1 minute time frame. The price dropped, create that change in state of delivery, and then I didn't really see anything here. I mean, sure, this could have been a fair value gap to enter, but actually it was valid enough. I say it was valid enough, but it wasn't a clean enough fair value gap for me. And I just saw these equal lows right here. So I figured price was going to want to purge below, and think that the order block was more of a cleaner way to enter the trade. So I saw the rejection, I saw the movement in candle, I saw the rejection, then I saw these candles forming on lower time frame, so I just entered right at the movement of this candle, and then at the close it just started to skyrocket up, now down to the 1 minute. Yeah, I took out these relatively equal lows, took them out, created a break on market structure shift. This definitely would have been nice to enter again here, but I was content with the entry I already had with the order block. Now back to the 1 minute, or not 1 minute, back to the 1 hour time frame. Yeah. All right, back to the 1 hour time frame. On the 1 hour time frame, you can see here the volume was strong and explosive to the upside. So like I said, tapped into that bullish order block, strong and explosive movements up, and then it tapped into that draw liquidity that I had marked up. Within the trade, we can also see levels. You can see elements. Within the trade, we can also see an element of inducement. We go to the 3 minute time frame, so I can see these specific areas. So yeah, several levels of inducement. So we see this new high created, a drop below, a little tap into this old or short-term high. But this was beautiful to me. This is a nice inducement where price runs up, it drops below, it takes out retail. Smart money takes out retail sellers. You're thinking the market's going to go down, but really it's just a liquidity grab to take out the short-term low, taking out retail stops, and then continue in the intended direction. So does that, takes out the short-term low, liquidity grab, and then price explodes up. Price does it again here, tapping into this fair value gap, very long fair value gap. You probably want to enter, you can do wick to wick, you can do body to body, up to you. I'm just going to show you. So since we're looking for buys, we'd want a discount. So anything below the 50% of the equilibrium is a nice entry. So yeah, at the 62 or the 79, both optimal trade entries. So price indeed taps into those levels and then explodes up, finally hits TP. So yeah, we can see two areas where price would have a nice area to enter, then another area right here, and then obviously this entry off the order block. So you really could have stacked 3 entries with the benefit of hindsight. That's what I'm showing you guys. Overall, I managed to trade well. I took a partial at 1.09637. Let's look for 0.937. Let's actually lighten this up, extend it out. Yeah, my TP was there. It's an equal low here, but we'll remove that. So yeah, TP was actually taken right here, just below this buy side liquidity. I saw price kind of retracing a bit, and you know, once I see some weakness or a little volume exhaust off of the candles, I just want to take some profit. Doesn't hurt to take profit. So just below, and then price obviously ran up again, and then just kept doing, creating new highs, new lows, so higher highs and higher lows. With this trade, I didn't go break even. So once I took this partial, I didn't break even. I actually moved my stop like from here. Let's do a red for visual purposes. So for my stop, I moved it from here and then just put it underneath this low right here. This is a structural low created. So then once price like broke up to here, that's when I was officially break even around here. And then as price continued to go up, I just moved it here once it was like right here. Then when it made a new high, I just moved it up here to my TP 1 level, and then just gradually managed to trade. Ended up, hitting my final TP at the top, so that was beautiful. Great trade for sure. All right, now with the benefit of hindsight, I definitely should have and could have stacked an additional entry to my winning trade. So I simply just entered here. I didn't add like an entry here or here. I was mainly focused on just watching how price moved during the session, especially with there was major news happening the day after, so Wednesday and Thursday, and I think the Fed chair Jerome Powell was going to speak on Friday as well. You guys can correct me if I'm wrong on that, but just going off my memory. So I just wanted to simply observe price, see how price action was moving during the session. I wasn't really focused on adding entries. I just was really tape reading as I actually took the trade live, so that was awesome. But yeah, I mean, stacking entries would have definitely had me up for the week even more, but Profit is profit at the end of the day. I entered at a great area, you know, and it ran up for a 1 to 3 R to R. That's in my trading plan. That's something I would take any day of the week. So regardless of what was going on during the trade, I still, followed my plan and executed follows. But what I will say is that assuming I did enter it, I would just enter a lot less, risk significantly less on the stack trades, because I want to mitigate any risks and protect my account the best way I can. And that's something all traders should do. But yeah, I honestly can't complain though, because the trade did go 1 to 3. And like I said, I'm up for the day and the week. So after this trade, I was done for the week. I didn't trade anymore, which was nice. Got to do other things, taking my mind off the charts and, focusing on personal business. A tip I would share with traders is traders who are looking to add another entry to your winning trade, or just a trade in general, make sure to always risk significantly less than your initial position. This is to protect your account and also to keep you psychologically in check as a trader in case the trade doesn't go in your favor. The biggest thing when it comes to trading is not winning, it's actually protecting your accounts. With trading, you want to have a lot of big wins. You want to have some small wins. You want to break even. You want to have small losses. But you never ever want to have a big loss, because that can really mess with a trader's psyche and you take them out their game mentally on the charts and even with their trading abilities. I definitely always recommend traders to risk significantly less when they're going for that second, third position into their trades. And like I said, the big losses always will affect you psychologically and can be a challenge to bounce back from. So take it with a grain of salt when looking to add entries to your initial position. Alright, thank you guys for watching this video. Questions, comments, concerns, drop them below in the comment section. If you haven't already, subscribe to the channel as we are growing steadily. Every video drop is a way to provide value to traders on their journey. I hope you guys found this video insightful. With that being said, check out the pre-recorded live that will be happening in the next minute or so as I take the trade, and you can see live how I entered based on what I've already described in the video. Signing out, Chosen.